Testing 1, 2, 3, 4. Sound check. How about sound? Do I have sound? You should also see a blue slide up. Okay, audio. Everyone says I have audio. All right, do I have video? Yes. Yes to video or yes to video? Good. Okay, cool. Thank you. It's hard to monitor at this end what you guys have. We're going to start in just a minute. Hello, Byron. Hello, everybody. Is the sound level good? Not too loud, not too soft? Last time I think it was a little bit faint. Good, okay, good. I switched to a webcam microphone and I've got a headset on so that I don't talk over myself, and I think that will work out pretty well this time. Alrighty, we're gonna start in just a minute. Okay. Oh, my headset timed out. Hold on a second. All right, one more time on sound check. I had to shut something off. Are we still good on sound, everyone? Sound good. Cool. All right, we're gonna start. Welcome, everybody. Steps to profitable trading, parentheses, investing in quotes. I'm going to explain that in just a second. Before I do that, I just want to kind of set a tone. I like to do these pretty casual. I have on one of my monitors the chat running, so if you guys have questions or comments along the way, feel free to make them. I'm going to take questions at a couple of different spots and at the end, and I left a ton of time. Last time we just kind of ran out of question time. So I've got like a half an hour of slides and talking and lots of free time to stop and consider questions. So keep that in mind, number one. We'll keep it kind of informal and casual, number two. Number three, this is kind of an important one. As I was putting this together, I realized that the challenge here is the audience. You guys are coming from a bunch of different perspectives. There was about 80 people registered as of the time I last looked, and I'd say maybe 50 of them are people that are either active traders or wannabe active traders. intend to be active traders. And then there was maybe 10 or 20 that are just kind of interested in what we all talk about in surfing the markets, and but are kind of aware that there's stuff going on that isn't normal. I'm doing air quotes on the word normal. So, so keep that in mind too. The purpose here is not for you to be able to do all these things. That's just not realistic for any of us. But what is realistic is understanding that this is kind of an important sequence to burn into your brain, particularly for trading, investing. I'll explain that again in a second, but for pretty much anything that you want to do well over and over. So, so let's move into it from there. Okay, and nothing, there we go, okay. All right, contact information. Last time I was told I didn't leave this up long enough. It will be up for a couple of minutes here while I talk, and it will be up at the end. If you need to reach me, please use email is preferred. Chat, if it's something really fast while the market's moving, I might be able to answer. You can follow on Twitter and in the groups as well. Again, this will come up again at the end. Okay, the standard disclaimer, this is educational. I'm not your tax or investment advisor, although I'm going to talk about that because that's a big chunk of this. So I'm going to walk a thin line there. I'm not selling anything today. And I encourage you to take anything I say and go out and investigate it and try to prove me wrong to yourself. That's why we're here. And if you can't, then maybe I'm onto something, right? Okay, so this is our agenda today, and I'm just going to touch on these items lightly, and then we'll go into them in depth. The game has changed. You hear this term every now and then, a paradigm shift, when just the old rules aren't really applying anymore. Gosh, if this is not one in the financial markets, in the 46 years I've been in one, I don't know what is. So yeah, we'll come back to that, but that's really important. Identifying and eliminating the noise. This is really key too, particularly if you're one of the people trying to learn how to do this for a living consistently. But as an investor also, there's a lot of noise out there, and it's really important. Even if you don't, quote unquote, manage your own money and you quote unquote have a guy, you need to know what's going on. So that's my mission here. And hopefully I'm going to show not how to do one for each and every one of you, but kind of, I've talked about this a lot. I have a process. This is a really critical part of staying focused on what's going on. So that's really what this is about, but I'm going to kind of go around that topic and try to fill in some blanks that questions I get asked a lot. A process is a highly individual thing. So, don't look at mine and say, well, that doesn't make sense to me. I'm not a day trader. I don't scalp and do 400 trades a day. I want to buy a stock and make money over 3 months or something like that. You want to be a swing trader is what that's called. You still need to have a process. And I'll go into that in quite a bit of depth. Finding your Bubba. What's a Bubba? If you guys recall the movie, this is just an easy term, and it's totally right on. The Bubba's your niche, where it just works, and everybody has one, and finding it is the most difficult thing there is in this space. There's no question. You can be really good at understanding the markets technically and theoretically and everything else. You can be really good at building a process, but if you don't find the space where you exist properly and that feels right and where you flow, then it's just not going to work. And that is not one time. You don't just find your Bubba and that's it. You're done. Again, 46 years, I've probably been through that a couple of dozen times. I kind of just went through it again, learning order flow since like 2014. And that was a huge impact on me coming from technical analysis, because order flow contradicts a lot of technical analysis, and that's a constant battle in my head. And I know a lot of you are struggling with that as well. Okay, so that's what we're going to do. Just making sure my sound is still working. And are there any questions about our agenda or the audience we're trying to talk to? Okay, I don't see any. Perfect. All right, thank you, Amy. Okay, the game has changed for everyone. And I really mean for everyone. If you're one of the people, and I know there's some of you here, I know you from high school, and maybe you're sitting on a big retirement account, and you got a guy, and he manages the retirement account, and everything's been fine for the last 20 years. Guess what? If you haven't sensed it, that's not the case anymore. Why? There's some reasons. We're all traders. This is a concept you need to burn into your head. Even if you have money that someone else manages, or even if you have a 401k and you're invested in index funds or bond funds or whatever it is, you're making decisions about trades. You are buying something with the expectation that it's going up or down. You have to create a mental framework around that, or your emotions are going to rule and you're not going to be consistent. And again, if you look at the title of this session, it's about doing this consistently, whether you're investing, swing trading, scalping, intraday like I do, whatever it is. Okay? So you must be a specialist. There's no more hands off. You can't have a guy anymore. And I'll explain why in a minute. But even if you're a day trader, you have to have a specialty. You know, I know a bunch of you are looking at something like the OpenFive setup that I've talked about in the group, or the HiMomo ones, or whatever it is, you know, or maybe you have your own using whatever metrics or tools you've developed. That's cool. You just have to make sure that that thing that you have developed works for the time frames and the markets you're trading it in. And there's just no way that's a hands-off process. As people say, oh, I've developed an automated model and it, you know, it makes money all the time and I just turn it on and, you know, I go play baseball while it's running. Nonsense. You can build one of those that will execute one setup for you. But be really, really skeptical when you hear claims like that, because it's just not realistic. The math of the markets doesn't work that way. Okay, this is key. I put it in yellow so everyone would pay attention, so I'm going to pause. Your money is literally no longer valuable enough for someone else to manage it for you. Is there anybody that doesn't understand that statement? I'll fill it in with a couple of other things. Interest rates are negative in most parts of the world right now. What does that mean? That means you pay someone to take your money from you, okay? Think about that for a second, folks. Think about that. This is not your father's or your grandfather's environment where you built a retirement account and you lived off a nest egg. It's not realistic. Exactly. Amy said there's not enough room for them and you to make money, which is my next point. Wealth management now requires $50 million to get anybody that even knows what they're doing. At Goldman, for example, it's higher than that. It's $75 million now. The numbers are so inflated that if you're the reasonable 50-year-old with a $2 million retirement account and you think you're okay because your guy has done well for the last 15 years or 20 years or 5 years or whatever number that is, I'm cautioning you to really question that assumption. That is my point. I hope everyone's hearing that, because again, I'm not selling you anything. I'm not writing a newsletter. I don't have a Furu channel where you're paying $200 a month on Twitter. I am trying to educate people to stuff that I'm seeing, and that's my purpose. So please consider this for your own circumstances. The next piece of this is that artificial intelligence is better at finding value than you or your guy. What does that mean? Okay, let's take a step back. There was a time I came up in the tech boom. I worked for IBM in 1981. I worked for Microsoft up until about 5 years ago. In the middle, I did a 2 or 3 dozen, 26 total startups. The point is, I've been around that space a lot, and it used to be that you could see something that was truly different, like Apple with the iPhone or the Mac even. And I was involved with that project in 1982 with the Mac. The point is, those things, in those days, there wasn't information like there is now that was instantaneous. So you could say, God, Amazon, yeah, they're losing money, but boy, in 10 years, maybe they'll have something. Those kinds of thinking processes were valid. They're not valid anymore because AI is just better at it than you are, AI being artificial intelligence. And if you have less than $50 or $75 million, your guy is using the tools that his firm give them to pick stocks or funds or whatever. And guess where those recommendations are coming from? They're all coming from the same place. This is a zero-sum game, so that cannot work over time. This is the crux of this entire presentation today, right here. You really need to get this down, and then you need to say, okay, well, if I understand this and I agree, what happens next? this is, I kept this last point for a second because even if you've got a perfect process, and even if your risk management's really tight, and even if you're really good at scalping, which I consider myself, anytime something happens today, you know, Trump tweets or China does this or, you know, Turkey does that, the market has to instantly reprice risk. And for those of you that are not, you know, investment trained, what that means is that prices in the markets are determined by the balance of what people think things are worth, buyers and sellers. It's an auction. We're coming back to that. So anytime that balance of agreed value is upset, the market will have to reprice it. And that's why, like today, you see these wild swings. That's people getting stopped out who were short, who were thinking we were going down to zero. And then the guy's saying, well, if China happens, we could go to 3,500 on the S&P. They're getting long. It's a real crazy battle. Yes, I'm seeing a bunch of good comments from Amy here. Anything coming across the tape is integrated instantly. Actually, I would go so far as to say it was integrated before it gets to the tape. So being good at order flow is critical no matter what your investment strategy. But I don't want to get into order flow in this session because that's too specific. I want to just stay on this, okay? This is a really key point. If you get this, then the next stuff will make sense. So let's move on, and you can type questions if you have them. Everybody else, if you're following along, cool, feel free to say, yeah, I get it. No, I'm not following, anything like that. That helps me with my explanations and my examples. Okay, financial markets are auctions. If you don't know this, you really need to burn this into your head. There is no agreed upon value that Apple is worth $300, as analysts will tell you, or that Apple's only worth $100, or that XYZ is worth anything. It's worth whatever it will be paid for by someone that moment. And that's it. And when you see this kind of volatility and you see this kinds of crazy moves, you know, one day we're up 400 points, next day we're down 500 points in the Dow. What you're seeing is repricing. You're seeing risk getting repriced. And there are different kinds of players in the market at different times. But intraday, there's vast amounts of money that are designed, you hear them called algorithms or HFTs, high frequency traders. Their sole mission is just to push it around so they can capitalize on the movement. And hopefully, you know, you're learning that that's something you can do too, but by, you know, kind of chasing along with them like those fish that attach to sharks. But the point is, if you're not understanding this auction, you really need to think about this, because there's no such thing as a level, a price level, or a value that is support or resistance. Those are just suggestions. That's a really good way to think about it. They're inflection points. When we get there, there's going to be a bunch of folks that are going to say, well, last time we were here, we bounced off of it. Guess what? That's not valid, because we don't know what the factors in play were last time, whether it was 2 hours ago or 2 weeks ago or 2 months ago. Doesn't matter. What will happen when we get to those inflection points, those levels that everyone's looking at, is order flow will tell you what you should do next. And because we have this volatile environment, the algorithms are pushing that, the traders that chase momentum are pushing that, and anybody else is just getting ripped up. So that is what you need to keep in mind as you listen and as you build your processes and strategies. Why something happens is completely irrelevant. There are too many variables. I have this conversation on Twitter and on Facebook all the time. Why did we have that drop? What was the news? And you know what? 20 years ago, that was me. I had all the news feeds running on those 16 monitors. I showed you guys that picture in the group. And you know, in those days, you could kind of jump in fast enough. We didn't have all this instant news. We didn't have Twitter or any of this stuff. But today, that's just not true. It happens before you even see the news. So you really have to just learn to say, okay, I'm just going to go with the action. Regardless, again, the time frame doesn't matter. Even if you're trading over a 3-month time frame, you have to have an idea of what the action is you're playing. We're going to come back to that in a second. The market doesn't care what your opinion is. Learn not to have one. The only thing that matters is the price and the volume. The price at any given point is being auctioned. Somebody's saying, well, I'll sell it to you at that price. Someone else saying, I'll buy at that price. But think about it. Even if that price is quote unquote support, if one large trader comes in and says, well, you know what, I'm done. This is too risky. I'm going to put 1,000 lot on right here. Then your support level is irrelevant. That's why you can't rely on those. You have to look at them as suggestions, inflection points. And again, this is regardless of what you're trading. We're coming back to that. Price levels are just too easy to game. And even your good old fashioned technical analysis, it can be a tool, but you have to understand that it's easy for somebody running a lot of money to look at all those places and say, okay, the fib guys are going to buy here, or the pivot guys are going to buy there, or the whole moving average guys are going to sell there. And all they have to do is get enough people going against that, and it doesn't work. So you have to constantly understand that you're gaming those positions. They're not support or resistance. Those are words not to use. Inflection points. Okay. Success is neither magical nor mysterious. Consequence of applying basic fundamentals, there is no secret. Unlike what the book tells you, there's no secret indicators. There's no furu. That's a fake guru. They're all over Twitter selling you services for 50 or 100 or 200 or whatever dollars a month, or newsletters. It just doesn't work like that, guys. You have to figure out an edge. You have to figure out a process for your edge. And then it works like this. You guys see this with me when I post my example results all the time. And again, this is educational. We're not, giving advice or anything. I'm not your financial advisor. But every time I fail and I lose money, it's because I made a mistake in that process. I didn't do what I planned to do. If I follow the few simple disciplines and I do it over and over again, it's consistently profitable. So this is the crux of this discussion right here. You have to figure out in your trading, your investing, whatever your time frame is, whatever world you're in, whether you're a day trader like many of us, or you're retired and you got your millions put away and now you're thinking, God, I got to protect that or grow it. You need to find a simple thing that works over and over again and continue to do that. And that's not your guy. Again, I'm going to keep harping that. The second thing is you need to understand that when you fail, it's not because necessarily your process was bad. You have to first look at yourself and say, well, was I just stupid? I did that this morning. I wasn't feeling 100%. And I made a mistake in judgment, and I realized it. So I said, I need to trade the sim today and work on this presentation and just sit out. You got to get good at that. Okay, how much comes down to risk management versus trading method? That's a good question, Nate. Let's stop there for a second. And this is going to sound like I'm answering it in circles, but I'm really not. If your trading method, and let's just call that a process just so we're all on the same terms. If your process is sound, part of it is risk management, and part of it is also constantly reassessing your risk management. So the answer is, if you're doing your process right, it's those together and you're collectively getting that right, okay? So let's come back to that. And I'd love to do a room, you guys, going back to your question, Amy, your comment. It's just, I'm not going to play in the furu space. And, if I can figure out a way to make this kind of self-supporting like I've been trying to do, I'd be happy to do this once a week, talk about setups and stuff. I make much more money trading than doing this, but I love doing this. So, there's the dilemma. Okay, moving forward. Nate, on your point, let's go to that. What is needed here? The first thing is a process. I keep pushing that, okay? The second thing is an edge. Now, that's what you're saying, a trading method versus risk management. An edge and a process kind of combine those. And again, I'm not gonna really get into process building too deep, but that's a critical component of it. And I will explain that a little bit more in just a second. You guys hear me use this term playbook all the time. And it's really simple. A playbook is just a group of setups that use the edges that I've seen, and it changes all the time. Like right now, we've got really good scalping edges. And that just means that if you are not in the market, you're not risking your money. And when you get in the market, if you make money and get out quickly, that protects you from this environment of craziness. And it's not so much about having every trade have, risk to reward of 3-to-1. You're going to hear stuff like this all the time where, if you don't do that, you're going to lose money over time. That's not realistic with discretionary trading in a market like this. You have to learn just to take what the market gives you. Sometimes it'll give you 0.5 to 1, but you'll get it all day long. And if you don't understand what I'm talking about, in a nutshell, traders look to weigh risk versus reward. And the conventional wisdom, which is generally wrong in most things in trading, says, oh, it should be 3-to-1 or 4-to-1 or whatever. Yeah, that's true over time, but every single trade is a function of that trade and whatever the market's giving you at that moment. Okay, so the playbook is simply your kind of, it's just like in football when you see them, sketching out the things on the whiteboard. It's that, only they're predefined situations that happen regularly that you can execute against, and your odds of making money. So it makes it really mechanical. It makes it scalable. If you can do it with 1, you can do it with 100. If you're trying to do this for swing trading, which means, I'm looking to find XYZ pattern that shows up in tech stocks, and when it does, I'm going to buy with X amount of money, looking to execute at this point. That is a legitimate edge, and that's a legitimate playbook for a swing trader. I'm going to talk more about scalping intraday stuff, but that is legitimate, and you can manage your retirement the same way. But again, since you guys are a minority, I'm not going to spend too much time on that thread. Okay, last part. You need a feedback system. I heard a couple of, I don't know if he's with us, but Phoenix was telling me a couple of days ago that he was evaluating why he screwed up and what rules he broke. And that's exactly what you need to have. But you need to formalize all this stuff, guys. This can't just be, yeah, it's nice to do that, and I put it in my journal. But you really need to formalize it. Step 1, step 2, step 3. The reason you need to do that is because in the heat of battle, your emotions are going to try to mislead you. And the cleaner and more simple your processes are, your setups are, then the easier it will be to judge the risk and reward, to game them, as we like to say, and then the better your feedback will be. It's all a function of simplicity. Okay. I think this is, well, no. I'm going to give you one more slide, and then I'm going to pause for questions and comments. Okay, whoops, sorry. All right, this was something that I posted in the group, and then I can't remember who, but somebody posted, oh yeah, that's from Van Tharp, and I had clipped it out of a magazine like 20 years ago, so thank you for that. This is part of my process. You guys have seen me post examples. It's up in the group what my process looks like. This is the part of it that was pertinent to that last slide about having steps to go through and then having a debriefing or review process, which are the 2 items at the end. And then that reset your brain thing, I just pasted on there because for me, that's really important. Otherwise I get in this, well, I just did this and I made $1,000, so I'm going to just do that again. And that's really dangerous thinking, as most human thinking is, which is why you hear me constantly saying I try not to think, because thinking is what gets me in trouble. As long as I follow the mechanics, it works. When I think, or when I get biased, or when I follow biases, and there's a bunch of them, and that's a whole other topic, but this one is called recency bias. It worked last time, why shouldn't it work now? And everyone else is doing it, there's another one. So learn your own biases, and learn how to protect yourself from them. Okay, let's see. Let's stop there for a second, and I'm going to go back one of those, and I'm going to stop for questions or comments right now because this is a good place to do that. I see a couple coming up. Okay, does support resistance or fib levels apply differently in currencies, maybe for another day? Yeah, Amy, that's really another day, but here's the only thing I would say about currencies with respect to futures. If I was going to trade currencies, I would only trade the futures for currencies because that's where the markets are legitimate. I'm sorry, but FX is not a legitimate market in my opinion. Yeah, I know there's billions and trillions of dollars in it, but your broker is your dealer, and that right there should be the end of the conversation. So that's my opinion of that. The information isn't as good. The volume information is often made up. But yeah, you can make money in FX. You can also make money in Bitcoin. It's really dangerous to have succeeded in any of those places though, because they make you think you're a genius on what was probably mostly luck. Those markets tend to reward luck, and that's why people consistently don't do well. Okay, let's see. How can we recognize there's a changed environment intraday? Nate, this is a really good question, and this is my biggest weakness. And that is why why isn't this going to what my slides are doing? Let's see. Sorry guys, my slide jam, there we go, okay. That's why I have that reset your brain thing there, Nate. It's critical to go through this and say, okay, you know, self-analysis, am I functioning today? You know, mentally rehearse like you do in any sport or any tough game or video game. Look for low risk ideas. Those are your setups. Wait for those setups to come into the right price range or whatever your criteria are. Jump in, action. You cannot hesitate there. These markets move too fast. Execute, monitor your trade, take your profits, abort if you're losing money. Then you need to, the daily debriefing here, I would change that to debrief immediately. That's my answer to your question, Nate. It's really mentally hard to make that transition. And one of the ways that I did that, if you remember in my process, I'll share it at the end if you remind me, is I literally have two different modes. I have a scalp mode and I have a wait mode. And I literally have a thing on my desk. I'm holding it up, but you guys don't have a camera. I don't have a camera. Just it says wait mode on it, chill in parentheses. On the other side, it says scalp mode, be tight. And I literally put that right in front of my keyboard when I'm trading so that I remember what mode I'm in. And today, yeah, today would have been a really hard day to put on a wait trade and sit in it. It would have constantly spooked you out of it. And today was hard in general, so let's not worry about today too much. Okay, okay, Pavel made a point here. If more traders see levels, they could play out. But again, it's the order flow that is the most important at those levels. That is really the crux. I hope you're all hearing that, okay? Regardless of what method you use, I don't care what your tools are. If you're not looking at the order flow using a footprint or depth and sales and Jigsaw or Bookmap or something like that, at those points, you're missing 80% of the information. And if you don't understand that, you need to really go and investigate that because that's critical. That wasn't true 5 years ago. It is now. I would not trade your money without order flow information. Okay, let's see. Post-it notes. Yeah, you know who else does that? Dennis. He has like a whole panel of notes in these plastic holders. It's really cool. Maybe he'll share his trading desk in the group. I have an image of it somewhere from one of the other groups. Okay, let's see. Other questions. Okay, how to get into trend mode. Nate, that's a really good question. And let's see, is there a way to work that into this? Let's see, how much time do we have left? Bring up that again. It's just, we're a half hour in. I've left room at the end. I don't want to distract for everybody else, but if you bring that up at the end, I will go into that specific question for Nate and for Amy and for a bunch of other people that are asking about it. Yeah, no, never, Blair, exactly. You cannot do hope. Hope is not a stock symbol. You really have to have rigid rules about scalps. And this is seeming to be a big topic. So I'm going to do this at the end. So let me just write a big note to myself about this. Okay, let's go back into our agenda here because otherwise this is too much fun to go off on that tangent. I've had a few people asking questions and contributing, but I'd like to ask anybody else. With respect to what we've covered so far, let me go back just a little bit to this. Is this making sense for those of you that maybe are newer to this? You know, what would you like to know? There's no such thing as a stupid question. And, you know, the reason I'm doing this session is I really want people to get this point and to understand whatever method they choose to deal with this. You know, some people are just sticking their heads in the sand and that's okay. And I know other people that are going to cash, and a friend of mine bought a sailboat and he's going to sail around the world, come back in a year and decide then, you know, everyone handles it differently. But if your intention is to just leave your money with your guy, if you're one of those, if you're back here, remember, you know, there's just no way that can work. There's no incentive for him to make money for you. Think about that. Okay, more on how to get into the non-thinking straight. All right, that's a common one. Yeah, we're going to do that at the end, I think. How not to think. Okay, any other, from anyone else in the audience, any other questions or comments about this chunk of it that I've got up? All right, let's move forward. Feel free to post them. I'm watching it on my other screen here. Let's go up to this. Okay, so key part here. How do you eliminate the noise and navigate this environment? A process, critical. I'm going to show you more about mine, and we'll talk about a live example at the end. We'll use some of that time for that. Okay, finding your Bubba. This one. I know a couple of people asked if I could close caption this, and I wish I could, because this is a topic. I just have to share experience, and hopefully it'll make sense to you guys. And so let me back up. Really long story short. I started trading when I was 13, mostly doing swing trades and options. And I was really lucky and successful at it. So by the time I got to college, I thought I was a genius. And then I lost a real good chunk of money in my sophomore year of college in options, like 6 figures. And that was what I had made in the previous years through high school with all the trades. And so the reason I'm telling you that is that we all go through this kind of, the first step where you get it right and you think you're a genius. So to answer a couple of the questions about, not thinking, whenever you have that in your head that, oh God, I really have this down, that's a huge warning sign that you're about to lose a lot of money. So remember that. That's one example. The second thing that comes up over and over again for me is that my Bubba changes. I'm 59 years old. I used to, and I have a lot of energy, as you can tell listening to me. You've seen me, I don't sleep very often. An emotions journal is a great idea. If you look at the book, The Daily Trading Coach by Steenbarger, he talks about having journals like that. So I recommend that book. Good comment. Anyway, so what I've learned, even just with normal life changes, aging or stress or changes in where I'm living or time zones or whatever, I had to constantly kind of reevaluate what this was for me. And one of the things I'm finding is a real, aha moment for a lot of traders with order flow is order flow kind of solves this volatility problem. If you have an older model that you built with technical analysis that used to work really well, or it worked really well when the market was trending, the last 8 years, then order flow might be a component to help you decide when to be cyclical and when to be a trend person. And that, for most people, that's a really good distinction. That's a little bit bigger time zones and timeframes than I'm dealing with as a scalper to an intraday position trade. I'm not really talking about that. I'm talking about those of you that are really trying to do 2 or 3 trades a day, and I remember hearing that a lot back when I was coaching a lot of people back in the early 2000s, and it was doable then. I would submit to you today, that's really unusual. You can do it, but you'll get it once a week, maybe, if you're lucky, and maybe you'll get enough. Don't look back at the last 8 years of your performance if that's what you're using to judge that, because look at the last 18 months and then run your metrics again. I suspect you'll find that those tools aren't as effective. So anyway, and the other thing that I found was I used to be really rigid about times of day. So here's another Bubba epiphany that I had, another example. It used to be I could come in and just trade the open 5, was a really good setup, and that would be that, done for the day, one and done. You've heard that from a bunch of traders. But the reality now is, the opens are, they're gameable, but you never know which way, and you got to just kind of go with it. And stuff often happens during the day. A tweet comes out, or whatever. So it's really more about having your playbook geared toward what's going on in the market with the time of day as a filter for that. And that was a tough change for me to make too. I realized I could make more money, trading gold when China opened than I could sitting in the ES all day. And that was hard for me to adjust because, well, the last 10 years it didn't work that way. There's that recency bias times 10. So again, this is really about understanding yourself and understanding what works for you. And, I find I'm the most comfortable when I'm not in the market, and I like to go in, make money, and get right back out. That's my Bubba. But yours may not be that. Understand thyself. Okay, let's see. I am going to put the process thing up. Give me a second to do that. And then we will come back to this. Okay, that should still be shared on your screen, is it? Can someone give me a yes it is? No, it isn't. You should see my OG1 2019 master process. Cool, all right. So this is how I do this. And this looks really simple, but I gotta tell you, there's literally decades of work trying to fine tune it down to this. If you look along the bottom here, there's a lot of layers that aren't apparent. With all different kinds of considerations. And again, we just don't have the time to go into it in that kind of depth, but we do have time to go into it from the perspective of answering some of your comments and questions. So the idea of keeping your head in the game about whether you're, and let's see, somebody told me once that this is hard to see unless I get my pointer real big. So let's see, let's do this. Okay, I'm talking about this stuff right here. I have all of my setups, and these are my 8 setups, broken down into 2 categories. Are they scalps, which means I don't take risk, I'm in and out, I get whatever the market gives me, and my default position is to be flat, period. Notice all these with order flow, with ledge breaks, must define the range if you're playing ranges, with order flow. In other words, this is really specific stuff. No, I don't say, well, I'm using an 8-tick target and a 2-tick stop, or whatever numbers you want to throw in there. I do not do that. It is discretion. I just don't think under these conditions you can be that rigid. If you can, great. I haven't seen it implemented well. These, on the other hand, and you guys have seen these setups now. We've talked about a bunch of them in the group. Go back and look if you haven't. Like, when there's a spring, or there's a high volume reversal, or there's an overnight flip, or there's a first hour high or low, it will hit those and it will hang around for a little while, and then it might do the reversal, for example, in the high volume reversal. So that's why I wait and scale. It hits the point, and I've got some examples over here. When it hits the first touch there, I might say, all right, I'll throw 1 on there, and then I'm going to sit back a little bit and see if I'm right. And sometimes it'll go down and I'll be right, and it'll come back up. I don't know if you can see this chart. It's really little. Let's see if we can zoom in. For me, it's huge, but I realize it might not be on your end. Okay, so you can see there's a couple of points like that are examples of this that I'm talking about. Maybe a level broke and then it kind of bounced up and started down again. There's a bunch of them here. And again, I don't want to get stuck on this, but the point is that gives you the ability to do this weight and scale. Okay, I see and I have bad eyes. Good, so that's big enough. On my screen, that's 375%, so I need to go back down here. All right, so let's go back over to the process itself. So going back to the question that a bunch of you asked, Nate asked it, and let's see, I see a few others, Pavel, Nate, Amy. Let's go through the back end of this real quickly. Step 1 for me is just keeping my brain from thinking I'm smarter than I am. That's really what this is about. Competent has to do with some physical issues I have with pain, but notice how the process is number 1. Risk management, Nate, you asked me about that. I make sure that I review those things, but there's no hard number there. I just say to myself, okay, are you competent? Are you following process? Are you focused? Are you risk management oriented, which for me is to be flat, be in the market only when I can make money. Am I using my trader brain, which is risk assessment, not my lizard brain? The lizard brain is the, oh, wow, this looks like a great short, like people shorting into the open today. That would have been a lizard brain trade. And then, the wrong field rules. Some people use a 3 loser, 3 trades in a row that lose. I go with a feel. If I'm just not feeling it, I get out. This morning was like that. I went back to writing code. And, I probably missed a lot of opportunity, but I've learned my lesson trying to make myself do it when I'm just not making it happen. These are the things I call my pillars. These are kind of my personal ways of staying on that. But again, this is going to be really individual. Yours might be different. I'm a real minimalist, so simplicity is a real core component of everything for me. Once I've got that part down, the context, that's the intraday. So that's where I'll say, okay, where are we in the range, and what is there a trend in the rank goes and where are we on the opening 5-minute range and the first hour and all that. And I just kind of ask myself some questions, you know, the profile structure, what's the technical picture here? You know, what would technical traders be doing? Is there any just crazy price I'd love to get at the high or the low if it popped down there? Is there a trend day brewing? You know, you asked about that, Nate. You know, how do you make that transition? Well, this is how I do it. Every time I log into my computer, I go to this step 1, step 2, and I say, all right, could there be a trend day here? They're rare, but if this is one, I better behave like it's a trend day with less size and kind of scale in and out. If it's a trend flip, though, that's an overnight flip setup where, you know, we go up. Well, here's one right here, if you can see this. We go up during the overnight session, and then as soon as the market opens, it just crashes. And that's kind of like the reverse of a trend day. But if you catch it early and you kind of scale into it, again, note it's a wait and scale setup, then that can be really lucrative. And you give yourself time. That's the point here. You got to give yourself time to see that change. And you got to forgive yourself when you're stupid and you miss it. Just stop out and go get a cup of coffee and come back and start over. Okay. What do I mean by wait and scale? Oh, I'm sorry. That's a great question. I assumed that that was a given. Wait means, okay, I want to see the setup. So here, let's take this picture. I'm going to just make this really big for a second. Bear with me here. I'm trying to adapt a bunch of stuff to this forum. Okay, here we go. So wait and scale. Here would be a good example on this, this NASDAQ move. This was the overnight. It opened and it opened up, but then the first hour high was the high. It tried to hold the opening 5. It didn't. So what I mean by that would be over, you know, at the first hour high, it's a really low risk short. You could put on a 1 lot there and just sit in it. And then you could say, well, you know, if it gets down to the open 5, I'm either going to take profits or maybe I'll add to it, or maybe I'll do both. I'll take profits, and then if the trade works, it starts working again and going down, I'll get back in. There's a lot of different techniques to do this, but you get my point. It's adding when it's working and waiting to see it working, and that's your clue to add. You're not adding to losers, for example. Now, an exception to that would be if you're playing a range, which I mentioned here. You define the range in advance, and then, you know, you're trying to get in. You might not have, you know, 5 contracts that are all ideal entries. So, you know, you might be adding to a loser, but you're really not. You're putting on a position within a range that you defined in your head before you started the trade. Okay. Are scalps all in, all out? Yes, they are, Blair. The reason is by definition. Now, that doesn't mean I won't scale. I might do it in chunks. Like, let's say I'm doing a high Momo scalp. I often scale into those because sometimes they just run away and they're just such winners. So, you know, let's say I put on a 2 lot and all of a sudden I'm ahead by 4 points and it's not going back down. I might say, all right, let's take one of those off and it starts going up again. We'll put on 2 more. So then we'll have 3 again. So I'm going all in and all out at certain points. And that's why you see why I do so many trades. I will frequently get flat at a point, watch it for a little while, and then go right back in with the same trade. You know, paying the $2 in commissions or $3 in commissions or $4, whatever your rate is meaningless given the risk. So I'd much rather pay commissions as long as I can make more. And if I make a tick, I pay commissions, I still make $8 on every contract. So there's no reason not to think that way if you're scalping. There's a really good little paragraph on scalping from Darren Park that's in the group, and I encourage you to all read it. In fact, let me real quickly see if I can show you how to search the group and do that. That's a really good explanation of how to do this. Sorry. And there is a way to do this a little more thoroughly, but if you do that and you look for a post by Darren that I reposted, that's a good answer to it. So please do that, everyone, with respect to that question. Okay, let's see. You can always enter, so why chase? Exactly, never chase. Chasing is the worst thing you can do, regardless of what setup. That's why wait and scale. That's not chasing. You're in advance. Again, everything I'm saying is having at the beginning, before you start the trade, what you're going to do worked out. And in this particular case, what we're saying is, okay, we'll put one on and then we'll see if it starts working. If it does, we'll throw another one on. If it stops working, get flat and reevaluate. It might just be a pause. So yes. Okay, when the flow is not on your side, you consider exiting because you tend to get hopeful. Uh, that's more of how you manage your own emotions and what your own weaknesses and biases are, Pavel. I don't do that. I tend to look at it pretty mechanically when I'm scalping. I'll just say to myself, okay, that's working or that's not. If I'm hoping, one of the ways I can tell if I'm hoping is I'll like start looking at lots of different time frames or charts while I'm in a trade. If I'm doing that, I know that something's wrong because I'm trying to find reasons to stay in the trade, and that's bad. So you don't want to do that. All right, I need to look at the clock here for a second because we have about 10 minutes left. I'm going to hold this one to the 1 hour because otherwise the recording size is prohibitive. So let's see. I will take other questions. Otherwise, I'm going to go and give some more examples. Let me look back here. I have to fight FOMO often. Are you saying your default position is flat? Oh, Amy, you have no idea how good a question that is. I'm going to repeat that one. Amy asked a question. She has to fight FOMO. For those of you that don't know what that means, fear of missing out. By definition, my default is flat. And because my approach to risk management is to not be in the market, by default, I go back here where it says, develop a low risk idea. And then when I think I've got a low risk idea, my natural emotional position that I've trained myself to go to is, okay, if I were to do that, what's the guy on the other side of the trade doing? In other words, the futures trading is a zero-sum game. Every dollar is won by somebody else lost that dollar. So the point is, if I think I'm so right, there's somebody else doing it. Why does he think he's right? And that's a really good way to question your assumptions. And that will stop you from FOMOing, I think, or it will help. Yeah, today was a really good example because, they just kept taking the shorts out. And, and if you were looking at levels, you would have said, oh, that's a great short. It's perfect. It was the resistance level from XYZ day or whatever. And they just kept doing it over and over again. And, I wasn't feeling well and I wasn't trading well. I was scalping a little bit. I did one loser. I had a couple of winners. I got positive and I went to the sim because that's, again, what I do when I'm not trading well. I either go to the sim or I write code. And a lot of that, again, is physical for me, which is really frustrating. I can't even tell you how frustrating that is. But for you, again, everybody's different and you really got to look. One of the reasons traders say that trading is the hardest thing they've ever done, and any professional or attempting to be professional trader will tell you that. And the reason is because you've got to be just meticulously self-critical and self-aware. If you're not, you're going to just lose money. You're going to fool yourself. And you can't. This is about being really in tune with all of your weaknesses and every dirty part of yourself. Your greed, your fear, your stupidity, your I'm so smart, your I'm so stupid, whatever it is. Okay, it seems those shorts would work 90% of the time. No, Nate, no, no, no. Everybody yell at Nate. The opposite. Yes, correct. Nate, that is exactly why the order flow traders take your money. It only works when they're on the other side of the trade. Otherwise, it does not work ever, not 90%, never. You go with the flow. You get to an inflection point. You have to say to yourself, I have no bias here. Because the people are saying, oh, it's resistance. Nonsense. It's an inflection point. What does that mean? It means pay attention here. What are people doing? Are the algorithms trying to suck people in? What does that look like? It's that thing where they back up 2 ticks and then they come in 6 ticks and everyone covers again. And God, how many times did you see that today, guys? I must have seen 11 or 12 or 13 instances of that in the first hour. It just kept happening over and over again. I agree. Why are they buying this market? Amy and you and I don't agree on politics, but I'll tell you what, anybody that thinks this political environment is healthy for investors, they're nuts. So the point is, how can you not think the way that I'm suggesting for you guys. You have to go back. Let's go back to the PowerPoint. You just have to think this way. Nothing else makes any sense. Let's see, this spot right here, this is where we want to be. If you can argue with anything on this slide, then I'm wrong. And that's all there is to it. But, you know, I'm not here to be wrong. I'm not here to be right. I'm just stating a position that I think is pretty strong. And regardless of your circumstances, find your Baba. So, all right, we have a little time left. 5 minutes, yeah, like, we have about 8 more minutes. Okay, questions about anything? I have said that I would do a session like that. I'm going to go ahead and open that up since I have an hour and the recording will be there anyway. Open it up. It can be entrepreneurialism, it can be trading, it can be order flow, it can be specifics of setups. 8 minutes, anything goes, ask anything you want. I will attempt to answer it. I will show examples, et cetera, et cetera. Can we do more on the trend day stuff? Okay, can you give me a specific more question? How do we know when to just buy and sell and hold? Boy, I'm going to go back to have everyone yell at you. The answer is never. There's no such thing as buy and sell and hold. You scale into a position that is winning and you scale out as it stops winning. That's all there is to it. If that's a trend, it works. How can you get better sleep so you can always trade? Oh yeah, that's the polyphasic sleep thing. If you have a partner or live with other people, it's really hard. But the trick to that, in my decades of experience, both successful and unsuccessful at polyphasic sleeping, is really getting what you want to do in the market down to mechanicalness. So, you know I'm doing it right when I'll wake up in the middle of the night, you know, because my back hurts or whatever, and I'll go get a cup of coffee and walk around, and I'll turn on my monitor and I'll say, oh my God, that's a great Momo trade. And I'll just go buy 5, boom. $1,500 later, I'm like, okay, and I go back to bed. And, you know, the next day I'll reflect on that in my journal. I'll say, you know, that's really what it should feel like. So, so I strive for that. And, you know, it's really hard to explain deeper than that in this short, but I will be happy to explain that more and continue that email thread with you on that topic. David Tomas, or is David Tomas. Okay. Did you have an aha moment when you first figured out how to trade? Oh God, yes, I sure did. That is a great question. I know I've asked you this before. Am I saying correctly? Is it Marjan, like that, kind of together? Am I pronouncing that name correctly? Tell me if I am or not. Okay, let me answer that one though. That came for me like letter Y. Okay, like Marijan. Cool. All right. Here's where that came for me. You guys know I have a lot of respect for Pete Davies at Jigsaw and like letter. I will talk later about how to pronounce your name. Sorry, I'm tired. And you know, I had been doing stuff with technical analysis that was pretty successful, but I'd kind of developed my own kind of order flow stuff using those really fast charts. You know, I had some 10-second bars and things like that. So when I started looking at it in depth, I guess that was 2013. I was looking at Bookmap and a couple other things, and then I started looking at Jigsaw, and I licensed it in 2014. Yeah, I had an aha moment, but I didn't get it until I really departed from the idea of prices. And I'll tell you how I did that. On my domes, you know, you guys have seen on my desktop, in the main screen in the middle, there's a whole bunch of domes. What I did was I literally took the prices off of them. So I made it so that the color of the font and the color of the background was the same. So I couldn't see the prices. So all I could do was trade, and I did this in Sim and then I did it live. All I could do was trade the action I was seeing. I had no idea what the prices were and I didn't care. And it was a huge aha moment for me. Amy, I still feel stupid. So you got to learn to forgive yourself, but the aha moments come when they come. And you know, that's all I can say. It's hard. Seeing videos and having mentors and all that really helps. But sometimes, you know, you'll be on vacation 3 weeks and, you know, thinking about surfing in Fiji or wherever you are, and then all of a sudden you'll say, that's what he meant. You know, and a light bulb will go off. That's an aha moment. Okay. Yes. I strongly, if you guys didn't catch what I just said about taking my prices off here, I'm going to show you exactly what I'm talking about, because this is really a good idea and I don't share it enough. It's one of those ideas that if I was mentoring somebody, I would give it to them as an assignment. But so let's see, let me just, give me 2 seconds here to go grab a screenshot. Okay. I think this is the one we want. Okay. All right, you guys can see this. This is what I'm talking about. So on each one of these domes, you can see there's prices, and I have white on a black background for prices that have traded over here on the far left, and each one of the domes. And then I have gray for prices that haven't traded. So literally what I did here is I just made this entire thing black with black text. So I could see all the trades going off, but I had no idea what the prices were. And I did the same thing in here. I just blacked it out so I could see the volume. And it really was mind-blowing. It woke me up completely. And so that's a suggestion. I have a bunch of others. You know, at some point, I'm going to put together a couple people for a new mentor group later in the fall. And that's the kind of thing I like to share with those people. And it's a really good exercise. Okay, yes, write down your aha moments. Absolutely. How much of a pullback do I allow in a scalp if I'm up? Oh, usually a tick over break even, Blair. Because if I'm back to break even, then I probably should have taken profits. I generally don't like to have scalps not at least give me a tick. I'd rather take a tick, you know, 100 times than give up, you know, a big loss. So I hope that answered that question. All right, let's see what other questions. Example, exit. When order flow changes, yes. My recommendation on how to exit when order flow changes, real simple, Pavel, instantly. I learned that from Linda Raskey. When the trade stops working, pardon my profanity, get the fuck out of it. Trying to figure out how to save it is a losing proposition. It just is. And she's really good at that. And I suggest you get good at it too. I am good at it most of the time is what I would say. Yeah, people always give it too much room against you. And Amy, the problem with that in this day and age is look what happened today. I mean, look at some of these crazy moves we had. I mean, gosh, there was a stop blowout last night. And then during today, that was like 20 handles. I mean, and a lot of people got run over because they were using stop limits instead of stop markets. There's a whole discussion of that going on over in the TST group. So, that happens. Okay, how do I calculate time and success block sizes for each market? Wow, that's a really specific question. It's a good question. The answer is really simple. I do it based on the visual of the chart. I want the chart to show me progressively. All right, let me open my platform really fast here so that actually makes sense. That's a good question though. For those of you that are a little more experienced, give me 2 seconds to open Ninja here and I will answer that. And we're running a little long, but I want to answer that question. I'm going to butcher another name, but I think it is Kawika Bennett. Cool. All right. At least I got one name right. All right. My platform's coming up here, guys, so give it a second. And then I'm going to actually show you specifically how that works. Bear with me a second, guys. All my meeting controls are disappearing behind all my charts. So, okay, yeah, I get your question, like gold versus ES versus CL. They're all different. And for those of you experienced traders, this question Kawika Bennett is asking is a critical, good question. And that's what I meant back in the presentation about every instrument's different and every trader's different. So hang in there a minute. Let me just get this up here and I'll show you what we're talking about. This is a really important point. that's, you know, a little more advanced than the topic, but I don't mind doing that. Let's just throw up CQG real quick for data. Okay, and then I'm going to switch monitors. Give me a second. Stop share. All right. Hang in there a second, guys. We're getting data. It's loading. It's hard for me to comment on anybody's specific data like that, Nate. You know, I know the people at AMP, they're pretty legit generally, but, you know, you got to do your own due diligence and stuff like that. I prefer Rithmic because I want the depth and I want some other things Rithmic does, and I'll pay more for that, even over CQG. You know, only having 10 levels sounds like, God, what do you need more than 10 levels for? Guess what? You know, like Dennis said in the last presentation, I feel naked without my 20 levels, even in the ES. You know, it's a part of the feel and I need it. So I agree. Okay, so my fur yogi, yeah, that's Doc Zoo, Amy, that's his name. That's my alter ego. My minor in college was Asian philosophy and I'm into Zen and Buddhism and whatnot. So that is Doc Zoo, the dog. Okay, can you guys see the screen now over here? You should see NQES and total of 8 charts. Yes, okay. So to answer your question about how I do this, starting at the bottom, it's 30 seconds to 90 seconds. And that basically is I want to see the transition from one bar to the other. And the next level up is 5 minutes. And I've mentioned a million times in the group the opening 5 minute. That's the purpose of that chart, is the opening 5 minutes and the first hour high and low. So that's always on 5 minutes, and that's it. Now the 2 above it vary by instrument. So it's the same 30 seconds or 15 seconds up to 90 seconds on the bottom. That I do vary based on time of day. 5 minutes is always 5 minutes. Up here, it varies by instrument. So for example, this ES chart is a 12. This NQ is a 35. I screw around with that because I want to be able to see a couple of recent days so I can see the behavior around each day. Like, we're working our way up here, for example. And then up here on the Renkos, what I'm trying to do is take this movement that I've seen in the range and put it into context over the last month or 3. So that's what it looks like, for example, for ES, and you can see the settings that I'm using there and why that's working. So for example, if you look at this right here, this is literally just today, the overnight, yesterday, and the overnight before it. So this is literally 2 days. And if you look on this Renko here, 2 days is that little consolidation area right there. And I can see, well, that's part of another one from a while ago. That's the way I set it up. Yes, it's very different to what everyone else does. And that's with pride, Amy, because it works. And it took me decades to build it. If everyone else, look, if everyone has something that they're touting, it probably won't work, because if everyone's using it, it won't work. So, that's just common sense. All right, let's go over to another set of examples for that. And then I'm going to wrap it up, or the video is going to be too big a file to share. Let's see. Okay, we're over here now. Are you guys seeing the gold and oil? Let's see. Yes, hold on, I can't see the bottom of that. Okay, one more time. Can everybody see gold and oil? The exact same thing I just explained, you can. Okay, so same story over here, but you see the numbers are different. So 30 seconds and 5 minutes, always the same, that never changes. For what I do, for my setups, I need that information. It's critical. It's the reason it's big and right in my face on these portrait monitors is that's where most of my eye time is. And then up here, again, the ranges, I want to see the last few days. And then the Renkos, I want to see where those last few days fit in terms of the overall technical picture. And if you go back to my process, that's the thing I was talking about here when I said, what's the structure of the market? That's exactly what I'm talking about. This is the structure of the market. That's the context. I'm not trading that. I'm trading what's happening here and down here. But this is telling me what not even bias to have, but how to understand the context of the current action. Okay, that is a really good spot to end that. Any other questions? I'm going to wrap this up. I went 7 minutes over. I hope that was useful, guys. Let me bring my PowerPoint up one more time. And we'll go back to that screen. And I will conclude with one other comment. All right, let's see. Let's go here and let's go there. Whoops, sorry. All right, that's where we wanted to be. And okay, are we back on the main screen, everybody? One last time for that question. We are. Okay, so let me just finish this up and then I'll put up the contact information again in case you guys want it. You are most welcome, all of you, and I hope to do more of these, but let's see how it works out. Without your cripple, okay. Let's see. All right, last things. All right, we did a few of those. Please contribute if this is helpful, guys. There's a link up in the group on the event notice. You know, it helps me pay for the Zoom and all that, and it also helps just justify spending a couple hours putting this material together. And it makes me feel like you guys are finding value. Last, there's my contact information again. Last time people said they couldn't see it. Feel free to email me. That's the best way. I don't respond immediately, but I always respond. Chat or Twitter or the group, if it's something short and sweet, please contribute in the group, guys. Post your charts, post your questions. Don't be afraid to feel stupid. I pride myself on being stupid all the time. Thank you for my time. You are most welcome. How did I disguise? Talk to me, Blair. Open up an email conversation with me about this. I get where you're going, and we need to talk one-on-one about your stuff. Okay, Nate. I hope that was helpful because you need to forget that stuff. You really do. Okay, I'm going to wrap it up there, folks. Have a good evening. Have a good weekend. I hope to see you again soon.